Hello and welcome to ATF TV. I'm Christine Zhou reporting from London. Today we welcome Peter Knez, Head of Data and Technology at Asia Times Financial, who joins us today from San Francisco to discuss the role that data and technology play in modern index creation. Welcome to ATF TV, Peter.
Thank you very much.
So, Peter, how important is the role of data and technology in the creation of modern thematic Asia-facing indices?
Well, I think it's become critically important. And maybe let me put that question in context so we can kind of understand what's driving that importance. It's really the confluence of three things that have kind of come together with respect to Asia, globally in general, but in particular in Asia. One is just this, we're in the middle and early stages of a regime change where we're transitioning from a single polar world that was a U.S. dominant geopolitical and economic financial markets to a multipolar system anchored by China and the U.S. So that's induced the kind of restructuring of global supply chains. So that's a big factor currently underway, and you see that many instances of that in the globe. Secondly, I think another big change is just relative to technology is just the rapid change in innovation that's actually increased over the last 4 or 5 years, whether that's everything from electric vehicles to healthcare transformation. And so to chip manufacturing, 5G, which obviously is a big topic and influences lots of verticals. So that's, as a result, you've seen the combination of, switching to a multipolar world, restructuring of global supply chains, and then this dramatic innovation happening that's profound across almost all these verticals. And Asia is right in the middle of that restructuring. And then lastly, I think the third factor is essentially the emergence of corporate debt markets, most prominent of which is, of course, China's corporate bond market, where there's now liquid, relatively high quality corporate bonds. And so that's a relatively new development in Asia and it's having a dramatic influence on sort of the investment opportunity set within Asia. So I think those three things have come together to make data and understanding the data from an investing point of view and the technology necessary much more important. I think what that means is effectively is that the existing indexes that have existed for years, decades, really, they really are unrepresentative of this change, right? Whether it's the restructuring of global supply chains, whether this dramatic innovation that's happening, whether it's accessing these corporate bond markets, those kind of indexes to be able to capture that investment opportunity don't really exist. What that means is that being able to create thematic indexes or access these harder to access corporate bond markets provides an enormous investment opportunity. However, to do that, one, you need to be able to collect the data in order to build the indexes. So data becomes critically important. It's been quite common over the last 10 years or so to hear about, and people have applied machine learning and artificial intelligence sort of in the hedge fund space, sort of the high end of the risk spectrum, relative or publicly available information, so-called PAI. That's been applied in the hedge fund space fairly dramatically and consistently now, whereas in the lower end of the risk spectrum, in indexation, exchange-traded funds, there's been little or no application of that. So I think going forward, a platform that both can collect data, very unique data, publicly available information, for example, mix that with structured data, ingest that at scale, and then have a fintech platform to process that data, applying machine learning to it to enrich it, and then build optimal indexes to capture this dramatic change in the investment opportunity set, which is relatively untapped. And so I think that's why, at least I think it's extremely exciting time for people that have the right platform to be able to go out and do things fairly unique that weren't available even 4 or 5 years ago.
So, Peter, is data quality an issue in Asia?
Yeah, I think that's why it's important. I think there's sort of three challenges with data in Asia. There's a quality problem simply because the data is relatively new, and again, it's driven by this sort of dramatic change. So the sort of data that you want about something didn't exist, and so you have to be able to collect data and process data and be able to, as you know, as they say in the industry, clean the data, which requires technology. And so that's it. And then secondly, as I alluded to, a lot of the data is in multiple different languages. And so if you want to process it, most Western style platforms, you need to have a natural language processing platform to transition that language or transform that language into a different language. And so that can be more challenging. And in addition to quality, there's also the issue of just accessing the data. So, if, for example, accessing the data necessary to, say, build an index for the 50 most liquid corporate bonds in China, that data exists on websites. It's in a different language. You have to be able to go collect that data and access it. It's not as if you can go to one website, like say in the U.S., and go to the federal database and grab a bunch of data around, GDP or for that matter, corporate earnings in the U.S. Listed companies. So in some sense, you require a more sophisticated tech-driven platform to actually access the data. You need to put more effort into kind of making sure the data has fidelity, if you will. But that's sort of the hard part. The positive part of that is if you have the right platform, both from a collection and data collection and technology point of view, you have an advantage because that data is relatively unavailable to other people. So with the hardship becomes reward, frankly.
Peter, what trends do you expect to emerge in the near future, in terms of index creation?
Well, I think it's at the risk of a bit of hyperbole. I think indexing and thematic indexes are the new hedge funds. The way I say that, what I mean by that is that there's a lot of, when you see the world, as I articulated at the beginning, the rapid change and the confluence of those events coming together, there's enormous opportunity to be able to capture some of those themes. So it could be a theme around, I want to have access to 5G and the transformation that 5G is inducing. I want to try to capture that. So I think from an investment opportunity set, there's a lot of excess return, outsized returns to capture from being able to create those kind of thematic indexes, or to create an index that captures the Chinese corporate bond market, or captures India tech, or potentially captures something like critical tech. And then number one. Number two, as I alluded to, you really haven't seen the application both of sort of PAI, or publicly available information, unique data sets, proprietary data sets, enriched by machine learning and AI applied to thematic indexes. And so I think you're going to see the sort of the confluence of this kind of proprietary data that you've seen in hedge funds, plus enrichment technology like machine learning, applied to that data, and then the optimization of those indexes to capture that investment opportunity that's emerging, particularly in Asia, but actually globally as well.
Peter, thank you for being here with us today. We hope to have you back again.
Thank you very much for having me.
And thank you all for watching. Please check out asiatimesfinancial.com for the best Asia news on markets, economies, and more. I'm Christine Zhou, reporting for ATF TV.